What's up, guys? Got another chart I want to share with you today because I've been seeing it all over Twitter. Everybody's talking about the 2018 triangle right before we capitulated back here last November, or November 2018. Um, so I redid, the same idea, but a little bit differently, and I want to show you why. Um, because it's all I've been seeing today. Doom and gloom. Everybody's convinced that we're about to melt down, and I'm not in the same boat. Not with the data that we have right now. So if we look back here, when we first made our top, right back here in 2017, RSI fell underneath 90, and then in the next candle, it fell underneath the moving average. At the same time, the MACD started to wane. The positive momentum was starting to fade. And then we formed, this down sloping supply line. You come back here to the monthly open. We had two green months from this point, and then we had the reversal candle. But after that, the supply line, you come back down to the base of the monthly open, and when you got to the end of the triangle, the RSI had fallen underneath 50. You've got negative momentum coming in. And after one candle after it fell under 50, that's when you broke down about 50%. From the candle close in January and December on these highs, you've got a 50% drawdown to the base and then a 50% drawdown to the very bottom of the bear market. Then in February 2019, you got your first green candle. You have negative momentum waning. And then on your third candle, you break back above not only 50 on the RSI, but also the moving average. And it was, we went up about 300% from the bottom to this peak here. I'm not saying we're doing that again. I'm just, pointing it out. But we did have 1, 2, 3, 4, 5 green months in a row before we ended up, getting a little bit of a retracement. Now you come to 2021, we made our peak, and then on this candle, the RSI fell underneath 90, and then on the second candle, the RSI fell underneath the moving average. And on the second candle, that's when we came back down. Same thing to the monthly open of these two green candles right here. Not that that's really relevant, but that's what it was. We had above this, we had a pullback here. You could see that long upper wick. We had two green months, and then we reversed back down right to where we started. In this instance, it is a little bit different. We did make a higher high, but all the same, this was the end of the bull market. You broke underneath 90, you broke underneath the moving average, and you retraced all the way down 2 months of gains. And you did make the higher high. In Elliott wave, that would be an expanded flat correction. And it's you come down, you come back up, and then you undercut the lows again. Now, that's a pretty effective way of correcting too, because not only that, this gives, you get that confirmation top, double top, but also any shorts that might have came in here and had their stop loss, just above where price had traded, they could have gotten stopped out right there. And this higher high actually brought new bulls in, thinking we were breaking out, we're going to 100,000. So that was really, really effective. A lot of people got wrecked from this price action. But the same thing happened. Once we came back up here, we started forming this descending supply line, and we traded right along this base until the RSI fell underneath 50. The next candle, we broke down. And this was the capitulation with Celsius, with Luna, with all that stuff going on. Peak fear. Everyone's second guessing everything they know. And the interesting part is from the peak to the base, we retraced 50%. From the base to the bottom we put in June, we retraced about 50%. Same thing that happened back in 2018. Same type of pattern here. You had this, symmetrical triangle, whatever you want to call it, if you want to call it. Whatever. Same thing, and not exactly, but pretty close to about the same time frame, if I remember right here. From the time the RSI lost the moving average to the bottom, you got about 11 months. You got 13 months here. So it's a little bit different. But I don't really use time as much in any type of technical analysis. It's just something that was worth referencing. But same thing, you lost 50% from the top to the base, and then from the base to the bottom. From the top to the base, from the base to the bottom. Same exact characteristics on the oscillators. Same thing on the MACD actually this month. So far, I mean, not like it's much of a green candle, but it is actually a green candle this month so far. And the MACD is beginning to wane. So if we look, just for fun, if we look over here, when the RSI crossed over the 50 point and the moving average, that was about 3 months in. So, and that's kind of when stuff this third month really started accelerating. You can see the candles started getting a lot bigger. So that could be setting us up for, did I do that right? Yes. We might be getting that Santa rally. Everybody loves talking about the Santa rally, and I think that's when what was it? Yeah, I mean, we were rallying at the beginning of December, at least in 2017, but I think that was also right when we were breaking up into the 20s too, right? Yeah. December 2020, that's when we were breaking up into 30,000, about 28. And what were we doing? Well, last December, not so much, but we got the Halloween rally last year. So yeah, I mean, you could expand on this idea. Maybe you want to say, okay, well, we're gonna blow back above here, come back down, and retest the old base, which, depending on how you want to run it, could be as high as like $33,000. But I would think more than likely we're probably going to retest like 28, 29, maybe 30. And then we'll really get an idea of if there is going to be a broader reversal. I mean, this isn't saying that this is going to be the forever bottom, but there's a good chance that we get a really nice rally, and maybe a lot higher than people expect. On a monthly time frame, you kind of got this zone up here at 45 where you double topped, triple topped, quadruple, 5, 6. You got a lot of action going on here on the monthly. And what I was looking at, harmonic wise, I think, coming up to 51,000 at the 786 would give you a bearish cipher. But taking it really level by level at this point, because I don't know if this is truly going to be a macro reversal. You know, we might get a real nice reversal up here and then escalation of war or something else going on in the world where we did back in March 2020. Not assuming we're not going to get another one like that, but markets always have a way of finding the opportune time to present bad news. So maybe we do get a rally. Maybe we come up to the 786, or you know, maybe along this supply line, which again would be low 30,000s, maybe 29 at the 382. And then we'll see. You know, this could turn into a much broader reversal. Maybe it could be the, you know, the actual bottom, but we do get one of these, you know, retests before we move too far out of the zone. We didn't really do that back here in the 2015 bear market, kind of, you know. I think it traded as high as 316 and then came back down to 200. So it did a 618 retracement. And what do we do from, oops. So, you know, of course it's not advice by any means. I like looking at charts different ways and talking about stuff that, you know, maybe other people aren't talking about. And, you know, everyone's convinced the market's going to 10,000, just like everybody was convinced the market's going to 100,000. It's usually when you got everybody is just 100% sure where it's going. That's usually when it goes the other way. I mean, that's not something you can really quantify in trading, but it's usually how it goes. You get this narrative, who's going to, you know, sell their Bitcoin at 69 if it's going to 100? Who's going to buy Bitcoin at 20,000 if it's going to 10? Just something to think about. That's it. If you guys like this stuff, if you want notifications, like, subscribe, do all that stuff. It helps the channel. It helps me, so I'm not here talking to myself. If you think, you know, I'm a big idiot, you can also tell me in the comments down below. But that's all I got. You know, it's always best to keep an open mind. If we start breaking down further, of course, I'm going to be looking at some of these lower targets. You know, maybe these candle close. Back here, I'm not in the camp. I don't think we would be coming all the way down to 10. I think if we do, we might be in a lot more trouble than, you know, if you looked at the price action, though, I would say this engulfing candle right here probably created some imbalances, right? You've got some leftover supply because of the aggressiveness of this candle. You come down, you absorb the remaining supply in that candle on the first test. If you didn't get it on the first test, you probably got it on the second test. So I wouldn't consider this area here somewhere you need to back test, because if you look at it, you got your resistance, you broke your resistance, you back tested it as support. Now over here, it's a little trickier because you could say we back tested it right here, right? You got the engulfing candle up to it, and then the next candle opened and continued higher. So I wouldn't really look at this level as needing to be back tested, but it wouldn't be weird. You know, you could say, hey, there's imbalances left in these wicks. Maybe this engulfing candle, you know, absorbed that supply on the way up. You know, generally stuff like this, you expect it to get revisited for that reason. But if you did on the way up, which very well could have been, you know, with aggressive buying, with these, you know, aggressive moves we had to the upside, there might not be anything left down here, and maybe that's why we're not going down there, at least not yet. Okay, that's really it this time. That's all I've got. I got another video coming tomorrow. Again, it's just another different perspective, and I think it's a unique one that nobody else is really doing. So if you want to be notified, like, subscribe, join the Discord, follow me on Twitter, any of that stuff. It really does help out. Thanks.